Alan Nuckman of Agora Financial joins us now for our final trade of the day. Always a wonderful time to have you on our show. So what's your trader talk for this week?
Well, we've been selling into strength, but no cigar yet. We got very close to new all-time highs last week, so we'll hopefully see it soon.
This is an options expiration week, and
right.
You do have some trades on the table.
First off, last week we got out of our second half of Micron. MU, we sold it for 100% profit. Sold it too soon, but that's our strategy here. To talk about the September positions we have, we've got 3 positions going into expiration. We've got JD.com, which is about a break even. We'll see if it can rally to new highs one more time. Oracle is off. That looks like that's a loser. And we've got the second half of Twitter, and Twitter's hanging out by its highs one more time. So we've taken profits on half. Let's see if we get a little bit more.
Moving on to the month of October, what's happening there with your WPI trade tracker?
Well, again, it's about the strategy here. So you can see the September options, we rode through a lot of ups and downs, and those looked very bad at one time, and the market came back. We did relatively well. Same can be said for this October positioning. So we've got Hewlett-Packard, Facebook, looking for a breakout above 190 there, Starbucks holding its own above 90, and AMD, they all have about 4 weeks of time. So again, it's the strategy and the strength of our indicator that gets us in the profitable side.
And then way out in December, we have some trades that we're tracking for you.
Yeah, it's a little aberration. It's FireEye. FireEye did break out above 14, so that's a December call option deep in the money. Because it was so cheap, we bought 3 months of time and gives us more time to be right. So it's not yet, but new highs are now right in sight.
Boy, did you play this one right, the WPI trade trigger Exxon. That has been one of the hot stocks of the week.
Right. Now, it was a Dow dog before what happened, but X, it's on for sure. It's trading around the 75 level. Watch that as a pivot because that's a halfway point of the 65 to 85 that we've seen in the last year. Now, this stock has only been up about 6% compared to the Dow being up 16%. So it's got some room to make up there. We're looking at the November 67.5 calls, which are very close to the low for the year, around 65. 2 months of time, and the smart money saw something even before what happened over last weekend.
Because that's what smart money does.
They know, somehow they always know.
That's amazing. Let's get your trading floor takeaways before you take off.
Rate wrong. Now, the other day I said there was a done deal that the rate cut actually was for sure. No longer. It was 95% now. The markets, because of some wrangling by the Fed and some action in the repo market, now there's a 50-50 chance. So we'll have to wait and see. But the likelihood of it's happening again in December and again in March, which were real high, are now down below the 40% level.
And then number 2, Euro moan.
Yeah, the euro currency is finally looking like we made a bottom. New lows and a higher close. That's how bottom gets made. So maybe that's the top in the dollar, and that helps the whole equation if that's the case.
Super 60, you have to be talking about oil here.
Oil, that's the price that everybody's been following. It traded between 50 and 60 for 3 months, broke out above the 60, a follow through there, target 70. That would help the macro market momentum and get the markets on the move one more time.
Very good. Thank you so much, Alan.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.